name is James Shepard, and I'd like to welcome you to this special live event hosted by Transaction Expert. Transaction Expert really is a brand that represents a network of experts across the U.S. and Canada that provide advice and help and different programs to small business owners. We primarily focus on retail, restaurant, auto repair, salon, physical location businesses, but of course we service a wide variety of clients through all the different relationships that we have with different processing companies and our network of sales professionals. We collectively represent about 10,000 small business owners currently in the U.S. and another 400 or 500 in Canada. And so my name is James Shepard. I'm the CEO of Transaction Expert. And one of the things that I learned very early in business is that in order to operate your business, you have to have some money. You have to have some cash, okay? All of you know that. If you're running a business, I don't need to tell you how important cash flow is. The number one rule in business, of course, is when you run out of money, you're out of business. And so you have to have that cash. Now, of course, the way that we all want to generate cash for our businesses, ideally, is that our income exceeds our expenses. And this is, of course, ideal. However, there are several problems that will arise and opportunities that will arise that keep that from happening. The most common, of course, is growth. And I know this firsthand. Our business, Transaction Expert, started in earnest about 3 years ago. And we have grown about 300% a year on average over these last 3 years in our revenue. And so, having that kind of growth requires hiring people. It requires, leasing space. It requires buying computers and other equipment. And for many of our clients, it requires building inventory. And so these are all real concerns of small business owners. You have to have the money to facilitate that growth. One of the most common requests that we get from small business clients in terms of capital is they ask us, where can we find the money to grow in terms of opening a new location? And so growth in terms of opening a new location, expanding your existing business, taking advantage of special opportunities is another reason that you need to have that capital that you might not just have sitting in the bank or that might not be generated from your positive cash flow in your core business. And there's a lot of opportunities that present themselves. I've worked with retail clients that had an opportunity to buy out a local competitor and get a huge influx of inventory for pennies on the dollar. But in order to get that, they had to have the cash in order to make that purchase. Other opportunities present themselves all the time, whether it be equipment at a discounted rate, the opportunity to expand your staff to get a key employee, all of these different opportunities. On the flip side of this, many times you have issues that will come up. The most common issue is a cyclical business model, meaning that over time your business is positive cash flow, but you might be really slow over the winter, or you might have a really good time during the holiday season, but then it gets slow in the spring. And so these different ups and downs in your business require you to get some additional funding to smooth out your cash flow. And so these are all reasons that businesses are seeking additional funding. Now, there's really 4 types of primary business funding that owners will seek. Now, again, we already talked about the best one, which is cash in the bank, of course, and that's how we all like to fund growth. But as we all also know, the reality of growth in our business is that many times we need to look outside of our own company to get the capital to grow. And so I have 2 experts with me today. The first one is Steve Koval, and what he's going to talk to us about is these first 2 forms of financing, traditional financing and SBA loans. And so I have a couple questions for him that I'm going to ask him in just a minute. But these 2 forms of financing are, of course, obviously the best in terms of lower interest rate, a longer period of time to pay back the money. And, of course, they're also the most difficult to get approved for. And that's what Steve's going to talk to us about today. And so maybe you have some relationships with local bankers, or you're going to look for traditional funding, SBA loans where you're getting government-backed loans, things of that nature. These are all, well-used sources of capital. But again, the hard part here is getting approved. If you can get approved for this type of financing, many times it's in the form of a line of credit. All of these different forms of financing are a little bit more difficult to get approved for. But of course, your interest rate is going to be lower. Your payback time is going to be longer. So what about if you can't get approved for one of these traditional forms of financing? Well, that's why I have Helen McQuain on the call today, and she's from a company called Strategic Funding. And so I'm going to be interviewing her about these other two forms of financing, the merchant cash advance. Now, our company deals with this a lot. We've actually partnered with Strategic Funding, and we work with them a lot on these. So a merchant cash advance basically is just loaning you money against your future credit card processing volume. Pretty simple. And so you're already processing, $20,000, $30,000 a month in credit card volume, and so you can get an advance on that. And again, Helen will talk more about amounts and how to get approved. A couple big advantages here. Much easier to get approved. It's not as much based on personal credit or personal guarantees. Much easier to get approved for these loans for this type of capital. Downside, of course, you would expect to get a higher interest rate. And so you're going to pay a little bit higher cost of capital here. Another good thing, though, is you get the money a lot faster. And so the traditional financing is great when you're putting your business plan together and you're seeking the financing that you need in order to fund your long-term business strategy. But it might take, and again, we'll talk more to Steve about this in a minute, but it might take 30, 60, even 90 days from the time you start working on getting this bank loan to actually getting the money in your account. Whereas the merchant cash advance is more of a short-term, quick fix. Sometimes in as little as 3 to 5 business days, you can actually have the money wired into your bank account for a merchant cash advance. And then also I'm going to have Helen touch on non-traditional financing, which is primarily dealing with revenue-based financing, where the company, again, not looking at your personal credit so much as how much revenue is your business doing, and then basing your available funds off of that. So I'm really excited to get started today on this and to have these two interviews, and so I'm going to jump right into it and go ahead and get started with that, okay? So now I've got Steve Koval actually with me here today, so let me introduce Steve. Now Steve and I have been working together now for how long, Steve?
A little over a year now, James.
A little over a year, and so Steve is with a great organization called B2B CFO, and much like many of his clients, I'm sure, we found Steve because we were realizing that we had the need for a CFO at our company. We needed somebody that could advise us, that could look at the bigger picture of our financials. But of course, we didn't have the money to pay for this full-time, executive CFO to come on board. And so what Steve Koval does is he's kind of a quasi-financial advisor, right, to businesses. Mm-hmm. Good way to put it.
Yes. Basically, I work with small mid-market businesses to essentially help them improve their profitability, look for ways to increase their cash, which is the lifeblood of any business, and really to focus on more of a strategic direction, as far as planning for growth and looking for ways to improve their profits.
Yeah, I find many times, even in our business, we get bogged down in the day-to-day of just, you're trying to get to that next day or that next week, and having somebody that's more looking at the long term and helping us with our projections and everything like that, that's really the big benefit I see from it. And finding cash, right?
That's true. I mean, one of our mottos is cash, we help you get it.
Right, exactly. So I came across Steve. He's been working with us now for over a year as kind of a personal advisor to me as with our company, and also even working with our team. Working a lot with our team and helping them as they project their areas of the business as we've experienced a lot of growth. So, Steve, let's start out by having you tell us a little bit about your background. How did you get into what you're doing now, and what's been your experience as far as working with banks? I know you've got a long track record of this, right?
Well, first of all, I'm a certified public accountant with approximately 35 years of experience of working with small businesses and helping them raise capital. Primarily in the function of as a CFO. I mean, I've been with B2B CFO now for about 2 years, but prior to that, I was actually with individual companies, in private industry. So I understand what it's like to be on, that side of the business and running the day-to-day operation and what happens when you do run into cash crunches and you can't meet payroll and those aspects of it. So, as James mentioned, I'm a partner with B2B CFO, and we're actually the largest CFO services organization in the U.S. We have over 220 partners, throughout the United States. And our focus is primarily working with small and mid-market businesses, essentially as their outsourced CFO, but to really look for ways to help the owners think strategically, develop goals and objectives, and really look for ways to help grow their business. We also have a big part of our practice is also focused on eventually, thinking about, your businesses. You're going to eventually exit your business one way or another, and is really trying to maximize the business owner's return on when they do decide to exit their business, and plan for that accordingly. But I've also worked with anything from small loans to large Wall Street type bankers. With one of my previous companies where we were very active on the mergers and acquisition side. So it all comes down to basically satisfying the lenders and making sure you understand what they really need to approve your loan.
Well, let's talk about that a little bit, because I think one of the big maybe it's a misconception, whatever it is, but with small business owners, a lot of times, we look at the banks as kind of unavailable source a lot of times. So, I mean, what do you look at as kind of the 2 or 3 big mistakes or biggest mistakes that small business owners make in terms of working with bankers that really hurt their chances of getting one of these traditional loans that has the lower interest rates?
Well, I'd say first and foremost is really lack of planning and preparedness. Is just to be approved for such a loan, you really need to understand where the lenders are coming from, because it's a very highly regulated environment now. So it will drastically improve your chances if you go to a lender and you present to them a package that basically has your historical financial information, your projected financial information, an overall business plan, and a clear indication of where you're going to use that money. If you go in and meet with a banker and say, hey, I need $100,000 to, just to grow my business, they want to know specifics nowadays. With the regulatory environment, they really want to dive down, deep and understand where you're going to use that money and how you're going to repay it. So I'd say, first and foremost is just preparing in advance for those meetings, and will increase your chances of success. So that's one thing. And then I'd say, secondly, and kind of related to that, is really almost, cash is the lifeblood of any business, and you have to be able to implement the systems to be able to know when you need more of it. As you're going through growth, or you're looking at expanding your business, or you had a little hiccup in one of your customers you've lost or something, you just need to be able to project that as far out to the future. So, what I stress with a lot of my clients is basically, spend the time necessary to plan as best you can. I mean, you're not going to be able to get it to the penny, but know in advance when you're going to need money, and not wait till the last minute so that you're showing up at your banker's, doorstep, in a dire emergency.
Desperation doesn't play well with bankers.
That's right. The best time to get a loan is when you don't really need it.
Right. Okay, great. Now, we are talking primarily to physical location business owners today. So we've got retail, restaurant, auto repair, salon, small businesses like that. Are there any specific advice you could maybe give to them about working with their local banks for that business type? Is there anything specific that they could do to really improve their chances?
Well, I'd say, first and foremost is really, number one, a lot of these businesses are dealing with a lot of cash and credit card transactions. So they need, from an internal control perspective, they need to institute the procedures to control that asset. And, a bank's going to want to know that they truly understand their business and that they've instituted the safeguards around their main source of repayment. But as with any business, really the banks look at what I call the 5 C's of credit, which essentially, and I'll go through briefly each of those.
Yeah, sure.
The first one of that is really the character of the business owner. So, it's very important that, you look at your own credit reports and you really understand your financial situation, because in any small business, the way the bank's going to look at it is they're really lending to the business owner. And a lot of times they may ask the business owner to either co-sign the loan directly or guarantee the loan. So it's really the character of the business owner. That's one of the first 5 C's. Then the next one is really cash flow. And with any business, the bank wants to know how it's going to be repaid. Right. So whether it's a small business, a retail establishment, a restaurant, it doesn't really matter. You still have to show the banker how he's going to get repaid. And then the third one is collateral, which in the case of the types of businesses that you referred to, James, their biggest collateral is going to be their inventory. Right. They may have some small accounts receivable, but they're selling a lot on cash and credit cards. But it's really, strengthening their collateral and getting control over it. And a bank's going to lend maybe a certain percentage of that,
Right.
as well as their hard assets, meaning like their property, plant, and equipment.
Yeah, they might own the building they're in.
Right, and that's usually what the bank's going to look for, is something that they know that if the loan were to go bad, that they can go back against that collateral.
Right.
In a traditional, bank loan.
Right.
And then the fourth item is what's called capitalization, the fourth C, which is really how much, the bank's going to want to know that the business owner's invested as well. So they're going to want to know how much money they've put into the business, and are they working there full time, or are they just a
Right.
silent investor? Is it a hobby? Because they want to know you're committed, and that's very important to them, because that they know that you're going to be working in the same shoes to get their loan repaid. And then the last item gets a little complicated, but it's the conditions of the loan. So they'll look at it. They'll do their own little SWOT analysis, which is looking at the strengths, weaknesses, opportunities, and threats of the business. So the more you can explain to those bankers about that, and the more they really understand about your business, the better success you're going to have in trying to land that loan.
One thing I find is a lot of times working with lenders, I think as me, I'm a marketing guy, right? So a lot of us in business are marketing, sales kind of background, and I think sometimes we paint a really rosy picture that actually comes across making us look as if we don't understand, right, the downside of the business. And it sounds like what you're saying is have that understanding to present to them. Here's the strengths and the weaknesses, the opportunities and the threats to the business, and that you have a grasp of your business, right?
Right, because what you're going to find is bankers are generally conservative,
Right.
so they're going to look, at the negative parts of
Right,
it. But,
right.
Yeah,
They want to make sure those negative parts exist and that you're doing something about it.
Right, and that you're not going to surprise them.
Right.
And one of the words of advice I'd have for any small business owner is really, don't be afraid of your banker. You really need to establish a long-term relationship with them. Because one of the big things, especially in a smaller community bank and smaller businesses, is really establishing that relationship so they understand your business. A good banker is going to want to do that, and that way they know when you're ready for your next loan.
Right.
Because you're communicating with them on a regular basis, and you're telling them about your needs and your growth and your expansion, or some of the issues you might be experiencing. So to not surprise them with that, because if they understand and they become your partner, then they will want to work with you and help solve your business problems.
Awesome. So let's see now. The last really primary question that I had written down on my list here is pretty specific, but it's one of the requests that I've heard most often, or concerns or opportunities, however you want to put it. A lot of these small business owners, they've got that one pizza shop. It's very successful. They've got a positive cash flow there. They're making good income, or they've got that salon or whatever it is. They want to open location number 2. They want to go to that next neighboring town, open up that next location, and duplicate their success. And they've got that positive cash flow, but they just don't have nearly enough money to go and open a new location and get all new equipment and inventory and all that. Do you have any specific suggestions for a business owner that wants to open the next location to go to a bank and present that opportunity to them as something they want to lend towards?
Well, I'd say that's number one. I think that's a lot easier than trying to get your first loan as like a startup company, because number one, you've established a track record, and the banks like to see that, so they know that they've seen your historical results. You can prove to them that your business is hopefully growing in the right direction. And then what I typically would do, as with any approach of any loan, is you want to show the bank, essentially, because it's an expansion, that you're really going to get some economies of scale. And you may want to do a projection of the results of your new facility, but you're going to get some savings on your fixed costs.
Right now, you can buy maybe wholesale versus
exactly, or some of your back office administrative costs are going to not be 100% incremental. So, normally what I would do in that situation is do a cash flow projection of what this new entity is going to do on a standalone, but then combine that with the existing operation to show how there's really going to be some cost savings there.
Some synergy in that.
So it reduces the risk to the lender, because he now has, a proven business that has, hopefully a steady cash flow, and that steady cash flow is going to maybe provide some of that startup capital for the new business. So generally that's an easier type loan to get than maybe a startup loan, where they're going to look primarily to the assets of the business owner as well, beyond the business, because it's not proven yet.
Great, awesome. So last thing I have is, if there are some small business owners on here today that say, hey, I'd kind of like to get a CFO advisor myself. What information would you give them on how to contact B2B CFO? And then if there's any other final tips you want to share, go for it.
As far as other tips, I'd say, I think I touched on already. Don't be intimidated by your bankers. You really need to establish a relationship with them, and that's really the best banker for you. Is one that you can almost become your friend and understands your business and understands your needs, because they're going to be willing to help you more because they feel committed to the relationship. They're in the business of lending money, but they want to make sure they get paid back.
Right.
So and if they know they can trust you, it's just like any other relationship, just like a marriage. Your wife trusts you or your spouse trusts you, so they're going to have a better relationship. So I'd say establish that long-term relationship, as best you can by staying in touch with your banker and making sure they understand your business needs. That'd be the one, I'd say, main tip that I would provide. As far as, our business, we can be found on the web. Personally, I have my own personal website. It's Steve Koval, SteveKoval, CFO.com. And my email address is stevekoval@b2bcfo.com. And if you just Google www.b2bcfo.com, you'll find other partners of mine in your local communities.
Great. Awesome. Well, thank you very much, Steve. I appreciate it. Thank you for your time today.
All right. Thank you, James.
Awesome. Now, what we're going to do is, first of all, I'm sure you all got a lot out of that. I mean, I've learned a lot from Steve. And, just over the last year, I can't even tell you how many times Steve has come in and brought a unique perspective. And so I highly recommend their organization. Now, I know all of us are thinking right now, yes, we need to take some action on this. We need to establish better relationships with our local bankers. However, I'm a big believer in having options available because, again, when you run out of money in business, you are out of business. And so we have this option here of traditional financing. However, what I found is certainly I enjoy working with bankers, but equally as important to me is having relationships with alternate forms of financing. And so, when you do get into that crunch and maybe you weren't able to plan ahead quite as far, and as Steve mentioned, you don't have that plan way out because something came up, an opportunity or an issue that needs to be dealt with right now, you need to have some alternate forms of financing. And so I'm really excited today to have Helen McQuain, who's really kind of from another side of this thing. Helen works with non-traditional type loans. And let me get her bio up here. And she works with a company, Strategic Funding. And I actually got to meet Helen a few weeks ago. It was a pleasure meeting her and one of her associates. They actually came out to our corporate office, did a training session for our employees now that we've partnered with them to help our clients. And this is really a great synergy for us because through our company and through our network of salespeople, we provide merchant services. And so one of the services we provide is credit card processing or merchant services. And so it really made a lot of sense to have a strategic partnership with Strategic Funding that provides these cash advances. So, Helen, why don't you introduce yourself to the business owners on the call today and also talk a little bit about your background and how you got into the merchant cash advance and non-traditional financing side of the business.
Sure thing. Hello, everyone. My name's Helen McQuain. Thanks, James. I've been actually in the payment processing space as James is today for almost 20 years now. I originally started as an independent rep selling door-to-door. I'm sure many of you have maybe done that in the past, selling some goods and services to merchants and small businesses. I then became a trainer in 2001, and I trained brokers nationwide on how to sell credit card processing. At that time, cash advance became pretty significant around 2004. At that time, I owned my own processing company for 14 years, and I sold cash advance as an ancillary product, not because it was something that I was looking for creating additional revenue. It was just because my actual restaurants and retail locations were calling our staff asking for this product. And that's basically how I ended up getting involved in credit card processing and cash advances today.
So, Helen, we've talked about this a little bit already, but What are some of the main reasons that you've seen? You've obviously done a lot more of these deals than I have. So what are some of the main reasons that you've seen that small business owners seek a merchant cash advance or an alternate form of financing like this?
Well, one of the main reasons, it's pretty funny. Our CEO recently just said we shouldn't be called alternate financing. We should be called, the finance solution today, because many small businesses, unfortunately, are not capable of obtaining traditional financing through banks today. That's why our industry has quadrupled in the last 7 to 8 years. Our money can be quite expensive. However, if you look at the variables of how you receive those funds, a merchant can get these funds within a few business days. It's not personally guaranteed at all. We just have the merchant sign a performance guarantee, meaning they're going to operate as they did in the past, and or if not better. And it's paid back through a small percentage of sales versus a fixed monthly payment like a loan would be a fixed monthly payment. Therefore, we're kind of going based on the merchant's cash flow and the business's cash flow. We're not offering loans. They're not traditional loans. What we're doing is we're purchasing their future credit card sales at a discount today.
Right, right. So let's talk about that a little bit, because I know, there's probably business owners on here today that have seen something about a merchant cash advance, but they've, never actually done one. So why don't you walk them through kind of this process in terms of what are the qualifications first of all, and what are some ideas of maybe, give us an example of like a restaurant or retail and how much they might be able to borrow based on their credit card volume. And then what is that process? I mean, they probably heard get your money in 3 to 5 business days or whatever. What is the process that leads up to them actually getting the money? How does it really work?
It's pretty simple. We ask them to fill out a one-page administration form, so there's not a huge packet of documents that they have to fill out. There is a checklist, and that's provided, and Transaction Expert obviously has that checklist, and it's about 4 to 6 months of processing statements that they get from their current processor, which I'm assuming would be Transaction Expert, and 4 to 6 months of credit or bank statements, copy of their driver's license to show validity of who they are, voided check, but very minimal information. Our primary goal is to take a look at the customer and focus on, is this customer going to be open in the next 10 months? Do we feel comfortable that this customer is going to be around in the next 10 months? Are they current on their rent? And that's primarily, the number one thing that we want to make sure that they will be there in the location prior to funding. And if the checklist is filled out, we do have over a 75% approval rate for merchants in Tier 1 and Tier 2, which is basically your brick and mortar retail restaurant locations. So we use. Right, it's a 7 to 19% approval. I mean, it really depends on what state, but unfortunately, the way our economy is, it is getting better, but the banks are not lending the way they used to, and obviously that has made our organization grow. I see in the template you put that we funded over $500 million. We've actually funded over $1 billion to date now, and we are funding well over 30 to 40 million a month now. Our average merchant that we're funding is approximately $35,000, but we fund as little as $5,000 up to $300,000, and sometimes we're funding up, even $1 million to a merchant. It just depends. But the biggest thing here, to kind of give you an idea, because I know I'm speaking to small business owners, merchant cash advance is basically purchasing a future asset at a discount today. And just to give you an analogy and a scenario so they can maybe kind of relate to it, is possibly if there's an event planner for a company that frequently entertains clients approaching a local restaurant owner, she may propose that she'll commit to one client dinner per week at his or her restaurant for the next 6 months. That equates to about $10,000 worth of business. If she said, hey, I'll give you $8,000 cash today for that commitment, most likely the merchant's going to take advantage of the upfront money. for the sales that will be realized over time. In consideration of the cost of the meal, there'll be plenty of profit even after the 20% discount. This essentially is what we're proposing when we offer to buy your future credit card sales at a discount today as well.
And give an example of, some of the, maybe a ratio or something of, or maybe some examples, what kind of money, some of these businesses are processing maybe 10, 20, 30,000 a month in credit card volume. What kind of money could they expect to raise, from a merchant cash advance?
Sure. We basically, that's the reason why we're asking for 6 months of processing statements. We basically offer 80% to 120% of their monthly average volume up front. They're receiving this as little as, as fast as 72 hours. It's usually 3 to 5 business days, but we try to fund within 3, as long as they've submitted everything up front. And, like I said, it can be expensive money. Hypothetically, if we were to offer $10,000 and the merchant was processing $9,000 a month, and we pre-approve them for $10,000, they may be paying back $13,700. I'm just using a number. And that sounds like 37%. That sounds expensive. And it's not, super affordable, but the reason why it's affordable is because the way they're paying it back is we're taking a very small percentage of their Visa MasterCard sales. So we're going with their cash flow and receivables. We have a very low default rate. Even though we funded over $1 billion today, our default rate's around 6%. And keep in mind, we don't ask them to sign a personal guarantee. So while we're funding over $30 million a month, and since inception of 2006, we've always had a single-digit default rate. It shows that our structure of what we've created based on our history, this actually helps our customers. If it was hurting our customers, we would have a much higher default rate and we wouldn't have an over 40% in renewals. It just wouldn't work. So if they're purchasing, if they're utilizing the funds in the right way, it more than pays for itself with incoming traffic.
Yeah. So just to kind of summarize that, basically what Helen is telling us is that as a business owner, if you look at your monthly credit card volume, as long as it's consistent over a 6-month period of time, you're going to be able to borrow somewhere between 80 to 120% of that monthly volume. So if you're processing, $20,000 a month, you can get somewhere between maybe $16,000 to $24,000 in a merchant cash advance. You get this money once everything is submitted, all the paperwork is in. They're normally going to be able to fund that within 3 to 5 business days, so you get the money very quickly. And then the way that the payback happens is it's a percentage of the credit card volume. And Helen, one thing that's great about that, and I know a lot of business owners like this form of financing because, as you point out, right when they have a bad month, it's not a fixed payment that goes back to you. It's just a percentage. So if they have a month where cash flow is hurting a little bit, their repayment of this advance is a little bit less, right?
That is correct. That is correct.
Yeah, that's really, really important. So, okay, so one other question on these merchant cash advances, Helen. So again, I'm sure most business owners on the call have heard about this. Tell us about strategic funding. You've talked about how, already over $1 billion in funding, which is amazing. Are there some other things you would point out that maybe set you apart and set Strategic apart from other merchant cash advance companies?
Well, sure. We've been around since 2006, and, we have a lot of white labeled partners as well. So sometimes the merchant may be funding with a partner of ours, but the capital source is derived from strategic funding source. We have a great reputation. We're headquartered out of New York City, but we do have, divisions nationwide. And I personally got involved with strategic funding source because they're extremely ethical, and we care about the longevity of the company and where we're going. We just partnered up with Pinebrook and had a $110 million equity line. And the reason why we come up with longer turning deals and we're willing to negotiate with the customer and bring the rate down from our higher factor rates as well is because there's a lot of companies out there that may be able to offer 3 or 4 times, maybe sometimes they can beat us on our monthly volume. But keep in mind that our default rate's around 6% and has been since inception. I think that's extremely vital to know that because we're not going to overfund a merchant and hurt that merchant. And we want that merchant to become kind of a temporary business partner of ours. We kind of try to tell the customer, hey, look at us kind of like a rent-a-partner. We're your financial source. We're here. If you'd like to renew with us, we're here. But we're not going to take 20% of your sales for life. We're going to take 20% until we're paid back. If you need that partner again from a financial standpoint, we're here. If not, that's fantastic. We love to help businesses grow. We're very well known for cross-collateralizing existing locations. Maybe they have 2 bagel stores. They'd like to open up a third one. Maybe the way they've opened up their first 2 initial locations was giving 50% of the business away for an investment. There's a lot of unique ways that you could utilize our funds, and I think knowing that we've been around for so long and we're one of the main players in the industry is pretty vital to partner up with somebody.
That's great. Now, one last question I have for you, Helen, is lately there's been a lot of talk about the revenue-based financing. I actually just, I think it was yesterday, I was reading Entrepreneur Magazine and saw more about that, and so it's becoming more and more popular. So can you explain to our business owners here, first of all, maybe there's some certain types of businesses that benefit more from this, but explain what is revenue-based financing, how does it work, and how is it different from a merchant cash advance?
Sure. It's actually, it's similar to a merchant cash advance. The only difference is the rates are similar. The only difference is revenue-based financing is basically taking a look at the overall receivables of that customer. So if that merchant they may be a distributor, so maybe 25% of their incoming receivables are credit card sales. So if they're looking for, some funds and we're giving 100% of their monthly receivable, it may not be enough to carry them to what they're utilizing those funds for. So we'll take a look at their monthly receivables, including cash, checks, and wires, even if they have minimal credit card sales, and we're going to offer anywhere from 35 to 50% of their monthly sales. Unfortunately, we will not be able to collect through credit cards. It will be through an ACH. That would be a direct debit, but it's on a 21-day, and it's a fixed ACH fee. We are flexible. We're able to offer weekly ACH options as well. But it's basically factoring all of their receivables versus just credit cards. Correct.
Yeah. Okay, that's great. Well, that's awesome. Now let's see. You have any closing tips here for our business owners before I get to our Q&A session? I will go to this next screen while you're thinking about that, though, and show them. So we have a URL set up, transactionexpert.com/cash. And so if you're interested in talking to one of our local transaction experts about getting a cash advance, working with strategic funding, you can go to transactionexpert.com/cash, and we will have someone follow up with you from that. But any closing tips, Helen, or anything you'd like to share with the small business owners before we get off the call today?
Sure. If you're looking to possibly buy out a business partner, or if you're preparing to pay a certain amount of taxes, I think the best way to get a cash advance, the best way to utilize this advance is to purchase inventory because it pays for itself at that point. If you have a restaurant and you can't seem to afford, the higher end products and you're 86ing things that you shouldn't be 86ing, or if you have a retail location and you may have stock but you're not, well equipped with stock, I think purchasing inventory in bulk and using cash is very powerful. It will pay for the advance, and customers that are walking into your location will want to come to your location more often because you have, everything they're looking for. It's also a great tool if you've been thinking or dreaming about opening up an additional new location. You can always utilize your existing one to open an additional one. So there's many other reasons why you could take advantage of a cash advance, but I just wanted to give the top
Yeah,
three.
and I think, Helen, too, one of the great things about it, like you mentioned, is once you've established the relationship with a company like Strategic Funding, the process of getting that second or third advance is really fast because you've already got all the information. And so it's great to just have that existing relationship, even if maybe you don't need a big advance right now. If there is some opportunity, like you mentioned, inventory purchase or something like that, you get this advance and then they have this relationship with you. I mean, it gets a lot easier as time goes on, as even Steve mentioned, as you've been working with the business owner and you have that level of trust and you know their business, right?
Absolutely. And like I said, one of the advantages of getting cash from Strategic is it's fast. So, something everybody pays for convenience and speed, and you have a very high chance of approval here. It's immediate. It's cash that's not personally guaranteed. It's based on your performance of your business, and we're going to give you cash, based on your history and hoping that we're going to grow your business with that cash. I mean, we've seen many merchants, double their business because they're utilizing the cash the way they should be.
Yeah. Well, that's great, Helen. Well, thank you so much for your time today. I really appreciate it. I know all the business owners on here got some great information from you today, so thank you very much for that.
Thank you.
All right, now I looked through here and I think that we have answered all the questions that our business clients had just during kind of the interview process. I saw questions as they came up and kind of interjected those into the conversation. I don't see any others. I'll give you just a second here. If you have a question, go ahead and type it out in the question box over to the right. I'd be glad to do my best and answer the question for you. Again, if you're interested in the merchant cash advance, you can go to transactionexpert.com/cash and fill that out there. And again, we'd be glad to have one of our local transaction experts come out and work with you on that and get you a cash advance from Strategic Funding, which is our exclusive. That's the only partner that we work with on the cash advances because, again, their reputation, and I can actually say that, I mean, that's one reason that we work with them is that you have to be careful. I mean, the merchant cash advance business, there are some, as in every industry, there are some bad apples out there. And so we really searched to find a company that was well established, had a great reputation, and that was looking for, how can we benefit the small business owner, not just how can we take advantage. And so they're trying to actually benefit you and make sure that they're giving you an advance that's going to help you to grow your business and move forward. Don't see any other questions. Again, my name is James Shepard. Thank you so much for taking the time to join us today. I will have this up on our YouTube channel. So it's if you go to YouTube and just search for Transaction Expert, you'll see our channel there. This will probably be up tomorrow or the next day, and we'll have a replay there. So if you missed some information, you want to come back and visit it, you can go there and find that information out. Thanks so much for joining us today for this live event. I hope that you have a profitable week. My name is James Shepard. Thanks for listening.